Hi everybody, it's Peter Schiff. This is Thursday, June 27th, 2013. And I want to take a moment to speak to you about the recent decline or the acceleration in the recent decline in the price of gold that really began, at least this leg of the decline, back in April. Most recently, we dropped another $50 an ounce on Wednesday. And if you listen to the so-called experts in the financial media, that's it for gold. The bull market is over. The bear market is here. After all, we're down better than 35% from the record high. That meets Wall Street's definition of a new bear market. So gold's time has come. This is it. It's going down. $1,000 an ounce, $800 an ounce, $500 an ounce. Who knows? Just get out because it's a bottomless pit. People like me who have been telling people to buy gold, we're wrong. The recent decline in the price of gold proves that we're wrong. Are they right? Do I agree? Is it really time to sell your gold? Is the long-term bull market over? Are the central bankers right? Is it really true that money printing isn't going to cause inflation? That QE has actually worked? The U.S. economy is recovering? I don't believe any of it. I don't think it's a time to sell your gold at all. I think it's a time to continue to buy gold. Now, is this the bottom? I don't know. I can't tell you where the bottom is in this pullback. We're at about 1,200. Can we go to 1,000? Sure. We could easily go to 1,000, but maybe we won't. I don't know. But what's more important is if gold goes down to 1,000, and there's no guarantee that it will, but if it does, I don't think it's going to stay there very long. I think the price is going much higher, not only than where it is now, but higher than the 1,900, which was the peak of this recent move. I think this decline is being driven entirely by speculators. First, you've got the speculative longs that have been getting out of their positions. You have the speculative shorts that have been, entering new short positions. In some cases, they're the same individuals that are just flipping and playing the opposite side. But a lot of the speculative money came into the gold market rather late, at least thus far. They watched the price go from below 300 to well above 1,000, maybe 1,500, 1,600, and they finally decided to join the party because they thought it would continue. They wanted to make a quick buck. Well, recently, as the U.S. stock market started to perform better, and even more recently, as Ben Bernanke hinted at removing QE, a lot of this hot money is leaving the market, and now you've got the speculators taking the short side. Well, they were wrong, at least in the short run, for hopping on board on the long side at 1,900, 1,800, 1,700. They're just as wrong now getting in on the short side. Now, I think they would have made money had they held on to their long positions, but they didn't. They cashed out. A lot of this hot money, they're more concerned about a short-term gain, and they can't ride out the bumps, which is what I advise long-term holders of gold and silver to do. But the speculators, I believe, are operating under a false narrative. Here's what they believe, and this is the bearish case for gold. The U.S. economy is recovering. Right? The worst is behind us. The recovery is gaining momentum, that the risks have subsided. Also, the housing market is back. Housing prices are going to keep on rising, and we're going to build this recovery on the foundation of home equity and the return of the real estate market. And number three, there's no inflation. The Fed has bankrupted forever. And finally, the Fed is about to tighten. Right? They're going to taper off their QE, and they're going to start raising interest rates. None of this, in my opinion, is accurate. In fact, it's the opposite of what's going to happen. I don't think the U.S. economy, that the recovery is going to gain strength. I think we're going to relapse back into recession. I don't think housing prices are going to keep rising. In fact, I think they're about to roll over, and I think home prices are going to make new post-bubble lows. I also don't think inflation has been bankrupt. I think it's here. I think it's a problem that's going to get worse. And because of all this, I don't think the Fed is about to tighten. In fact, I think the Fed is about to ease further. They're not going to diminish their QE. They're going to augment it. I think they're going to go from buying $85 billion a month to buying a number that is greater than that. So in other words, the market is preparing for the opposite of what is actually going to happen. And in fact, I think the only thing that will prevent the U.S. economy from going back into recession by the end of the year and prevent another collapse in the real estate price is if Ben Bernanke does do an about-face, admit that he was wrong in his optimistic assessment of the economy, and prescribe more of the same medicine that hasn't worked before, but that's the only medicine he's got, which is QE. So we're going to get more of it, not less of it. That is extremely bullish for the price of gold. Gold right now is being mispriced based on a set of circumstances that are not going to materialize. Meanwhile, if you look at the current price of gold, which is, I think now it's around 1,200 or maybe slightly lower, the majority of gold mines in the world can't profitably produce gold for $1,200. They're losing money, which means that gold is selling for less than the price to produce it, assuming that you have a mine, which of course most of us don't. So how can that be? Obviously, that can't sustain itself because gold mines are shutting down. They're laying off workers. They're canceling their capex. They're canceling exploration. This means supply is going to be constrained. So how can the price be down if the supply is going away? Now, you have to believe that demand is going to collapse. I think demand is going to continue. Maybe not from the speculators, or at least not until the price turns around, and then the speculators will be back. But the real physical demand for gold is going to continue, but the supply is not going to be there to meet that demand. More importantly, once the price of gold starts to rise, let's say we get back up to 1,700, 1,800 in the price of gold. Are the gold companies going to bring that capacity back online? Are they going to spend more on exploration and development? Are they going to hire more workers? I don't think so. They've just learned a painful lesson. That's what they did before. Gold prices were going up, and so they did respond by trying to increase supply. They're not going to do that the next rally because they've been burned by that. They're going to have to wait, which means I think the next rise in the price of gold will be even more spectacular than what we saw between 2000 and 2011 when the market made its high, because you're not going to get that new capacity. You're not going to get that new supply coming on the market. Maybe the price of gold will have to be well north of $2,000 an ounce. Maybe it'll have to be $2,500 or $3,000 before these gold companies have the nerve to increase production and before investors in these gold mining companies are willing to allow it. So I think we're on the verge of a spectacular increase when this market turns around. What's going to be the catalyst? I don't know. Is it going to take more negative economic data, or is it going to take the Federal Reserve to simply come out and admit the obvious and start to give the market more of what it needs, which is QE? I don't know. Or maybe the selling will just exhaust itself and the market will turn for no reason. But I'm confident it's going to return. Look back to the decline we had in 2008. Gold went down by about 35%, went from 1,000 to under 700, and then it went straight up to its record high of around 1,900. But if you really want to turn back the clock, think about the bull market in the 1970s. We had a 50% correction in 1976, where the price of gold went from 200 to 100. That's a bigger correction than the one we had thus far. And of course, I'm sure back then, I don't remember what they were saying, but I'm pretty sure it was similar to what they're saying now about the bull market being over, about the people who are buying gold being wrong. Look, it's down 50%. All the gloom and doomers and the naysayers, they were wrong. Well, what happened after gold lost 50%? In the next few years, it rose by over 800% when gold went from $100 to $850 an ounce. Now, it's my belief that the rally that's coming is going to be of even greater magnitude than that rally, because I think the fundamentals for the U.S. economy are much worse today than they were in the mid-'70s. I think the Fed is going to be much more reckless now than they were then, and I don't see a Paul Volcker and a Ronald Reagan looming on the horizon. So I think there are more reasons than ever to buy gold. I know I've said that before, and I've said it when gold was higher. Of course, I've also said it when gold was lower, but I don't think people should be worried. I think people should take this opportunity for what it is. If you've already purchased all the gold that you can afford, then don't worry about it. It's just a bunch of noise. What do you care if some fool decides to sell money at a loss when they own a commodity that will probably be far more valuable in the future? But if you've had a more gradual approach, if you've only taken a partial position, you should continue to move into the market. Don't be distracted by the noise. Don't be worried about what these naysayers are saying. They don't understand the fundamentals now. They didn't understand the fundamentals 10 or 12 years ago. They didn't understand them 2 years ago. The fact of the matter is, the economy is not recovering. the recovery that Ben Bernanke believes he has created is 100% dependent on QE. And in fact, all he had to do is talk about taking away the punch bowl. He talked about it. He didn't even commit to it. And the bond market has already collapsed. Real mortgage rates have already risen now from under 3.5% to 4.5%. And that's just the beginning. I think interest rates are going to keep on going higher. They are going to deflate the bubbles that Ben Bernanke has been desperately trying to reflate. And the only thing that can save, the markets from collapse will be the Fed coming back with more QE. It's not the right thing to do. It's the wrong thing to do. But the Fed always does the wrong thing. And the Fed always gets the economy wrong. So again, all I can say is tune out the noise and take advantage of other people's foolishness, take advantage of the speculators. And there's a lot of people shorting gold right now, and maybe they think they're making money. But let's see how much money they've made when they cover their shorts. Because it's easy to sell it. It's not going to be so easy to buy it back. Because once the momentum turns and everybody figures out the truth, where are the new sellers going to come from? I know where the sellers are now. They're the speculators. But who's going to sell the gold when they have to cover their shorts, and how much more expensive is it going to be? They may be laughing now, but I think the longs are going to have the last laugh. There's an old poker expression, don't count your chips while you're still sitting at the table. Well, there's a lot of shorts that right now have a stack of chips, and they're busy counting them. But I think when the game is over, they're going to be wiped out, and the longs are going to have all the chips in front of them. Take care, and bye for now.